Now, let's talk a little bit about how to actually create your balance sheet. It's something that's daunting, but it can be not so daunting. I mean, it's not always completely easy, especially for businesses that are established that have complex finances, but it can be simple. There are three things essentially that go into your balance sheet. Um, they are your assets, which are like the good things, things you own. There, and I'll get a little bit more into it in detail in a little bit. So there's the assets. Then there are your liabilities. It's kind of like, the simple way to look at it is money going out of your company or things you owe, so the money coming out. And there's the equity, the owner's equity, which is essentially the first two elements. Assets minus liability gives you the owner's equity. And so in this section, we're going to go over how to exactly create your balance sheet. Let's talk about the kind of assets your company can have. There are current assets and there are fixed assets. Now, let's explain each individually. Current assets are things like the cash you have, maybe the accounts receivable, which is a finance term for basically just simply means that accounts receivable means money that's still owed to you. It could be stocks you owe, you own, not own, you have, and it also could be things like maybe if you paid in advance for some services, which are otherwise would be expenses, but you paid in advance. That's a part of it. So those are your current assets. Current assets are things like the cash you have, maybe the accounts receivable, which is a finance term for basically just simply means that accounts receivable means money that's still owed to you. It could be stocks you owe, you own, not own, you have, and it also could be things like maybe if you paid in advance for some services, which are otherwise would be expenses, but you paid in advance. That's a part of it. So those are your current assets. Fixed assets are property you might own, inventory or actually supplies you might have, right? Like if you have machinery, that's it. Maybe a vehicle or something. That's a fixed asset. There are also there's also something called intangible assets, which is essentially like intellectual property. You own patents or trademarks, things like that. That's also, it can be valuable, and that's also a part of your fixed assets. Let's talk about the liabilities your company can have. There are current liabilities and there are fixed liabilities. Let's talk about each in a little bit more depth. Current liabilities are things like payroll you have to pay to your customers, accounts payable, which is a finance term that essentially means just any kind of things that any money that you owe to anyone, like really if you have some bills outstanding that you haven't paid, that's part of your liabilities. Those sorts of things, that's your current liabilities, meaning it's stuff that happens on an ongoing basis. Your fixed liabilities are things like maybe bonds you owe, or if you have if your company pays like pension to employees, that's also a fixed liability. If you have some sort of like debt, like mortgages or any other debt, that's also a fixed liability. So those are your liabilities. The way you calculate your equity, and this can be owner's equity if you're a single owner, or it can be a shareholder equity, is by taking your assets and subtracting your liabilities, right? And also this really gives you the health of your company. This is like a snapshot of the health of your company, because hopefully it's not a negative number, right? Hopefully your liabilities aren't bigger than your assets, right? Hopefully your assets are much bigger than your liabilities. At least that's where you want to be going. And so that's how you calculate the owner's equity.